A lot of the companies that we're backing are in environments that are changing rapidly. They don't have control of those environments. And again, back to origin of the species, like you have to adapt. Now, does it mean that you're abandoning your mission? Not necessarily. In some cases you have to, and those adjustments don't have to be significant, but you have to adapt because before you know it, you look up and a lot of things have changed. Looking down at the horizon, but also making sure you've got something that's implementable. It's like raising children. Eventually, your kids go off and they become adults, whether they go to college or directly into the workforce or whatever they wind up doing. And so when they're young, you can be very tactical with them and you can help them make decisions or make decisions for them. But at some point, you need them to have a 3-year plan and a mission so that those moments when you're not there, that they're making good decisions because you've set that set of values.
All right, Jason, welcome to Tech Scenes Unplugged. Thanks for joining me.
Jeff, thanks for having me.
Well, let's start from the top. Tell me about Origin.
Origin's a venture capital fund that's been around for 25 years. We are Series A and seed lead investors. We invest all throughout the US and Canada in technology companies with dramatic growth potential. We've been fortunate to be the first investors in companies like Grubhub and Cameo and Tavala, Talk, Backlot Cars, 15Fi, Veho, Clearjet, lots of others, about 100 companies over the years. And we're all builders. So our team is made up entirely of people who built companies and products before. That's behind our ability to really support our companies once we invest. And speaking of support, we're in 6 different markets in the US. So we're distributed in every US continental time zone. So wherever you are, founders, we're probably close to you. And our ability to support you is better when we're in person. And so that's a bit about what we do at Origin.
Yeah. And part of the reason I wanted to talk to you and like why I love Origin is I'm all about building and, having the experience of people that have technical backgrounds like you guys have on your team. And I believe your background is technical too. Operators, I just think like from a building perspective, it's all about experience and helping leaders and teams and provide them lessons that they can take. You don't have to learn everything the hard way, I think is something that I've learned over the years. You will learn the hard way. There's no way around that, but you don't have to, right? And so like the more we can share, the reason why we do, tech scenes and what I do, for work is about sharing that knowledge. And so that's one of the things I really like about Origin. And you guys are very dispersed. You've had a lot of success. Even some of the companies that you name, it's funny. When I did tech scenes in Chicago, when I came into Chicago, we did tech scenes. I wanted to have Origin on, wanted to have Cameo on. And that was, I think there are 4 people. I think there are about 4 or 5 people when I was talking to Cameo when I came into tech scenes. Wow. They've had a huge, huge success. They've been really fun to watch and grow with. But yeah, I love Origin. That's why I wanted to have you on the show. So let's dig a little bit deeper. For you, like, what was your background? And I believe it was technical before you came into the investing realm. What's the story behind that?
Yeah, Jeff, that's right. So I taught myself how to code in 1987 on a computer that had a 20 megabyte hard drive. Having a hard drive was a big deal back then. But this was before the internet and before coding classes and everything else. And it was just an obsession of mine. And what wound up happening was eventually I got into high school and could take some computer science classes. I majored in computer science at Michigan back when it wasn't as cool to be a computer nerd. I was a year behind Larry Page in the same program at Michigan. So, I tell my college friends I made friends with them and not Larry. So I hope it works out. But it was a really neat time to be in that world. Netscape had just gone public when I graduated. And I spent the early part of my career designing, building, architecting enterprise systems. And even to this day, I find myself coding things here and there. It's just been an obsession my whole life.
Yeah. I have a question for you. What was the first computer that you worked on?
It's called an Epson Equity 1 Plus. It was an IBM clone, IBM PC compatible. Back in the day, it ran MS-DOS. I will
Okay.
admit I read the entire DOS manual from front to back. This was an operating system before Windows, for you
Yep.
youngsters who are tuning in. And so it was a very different era, and because it was before the internet, the way we interacted was we used modems to call each other's computers to trade video games, to
Yeah.
trade other things, to get on message boards. And it was a really neat time. Like there's some really prominent venture capitalists, myself not included, who all grew up that way, and it's
Right.
just kind of a fun time in the world of the internet.
So I grew up in the Twin Cities, Minneapolis, St. Paul area. A lot of tech actually in that area back in the 80s. A lot of people don't know that how heavy the tech was actually in the Midwest. Uh, everyone thinks it's the West Coast, but a lot of companies controlled data, a lot of different companies that were there. Our schools had a lot of computers in them. So I think it was, early 80s. I was on using a computer. It was a TRS 80,
Yeah, yeah.
MS DOS, and we
Commodore
were
PET maybe also somewhere in there. Yeah.
I had a Commodore 64 at home. We had
Yeah.
a tape cassette drive that
Right.
we'd
That's how you'd
record things
upload
on.
the software. Yeah.
Yep. I still remember loading games. I think it was load quote comma asterisk quote comma 8 comma 1. I don't
Yes.
know. I don't even know what that is. I knew that 8 and 1 was referencing something to get to the drive. A lot of my coding, I would just copy it out of the book and then it would do things.
Right.
So
Right.
I
That's
don't
how a
know if
lot of us learn. That's the only way to
yeah.
learn, right? And then you'd make a mistake or it wouldn't compile or something would go wrong and you have to fix it, not having any idea how to do that. So I struggled for a while there, like a lot of us
Yeah.
did. And I'm just grateful I was able to get proper computer science classes in high school back in the I guess it was late 80s, early 90s, and that's what kind of set things in motion.
That's really interesting.
But for me, that's my technical background. But I got some advice when I was pretty young from a patent lawyer who suggested that having two professional careers was a good idea. You'll be more intellectually fulfilled, more professionally exciting, more financially rewarding, and that all appealed to me. But I knew I wanted to do technology, and that was going to be first. But
Yep.
over time, I was interested in capital markets and finance, and watching other people make personal finance decisions over time and seeing what the implications were.
Right.
I wanted to educate myself on that. And I'd done some self education in that, but knew I wanted to go to business school. The day I graduated college, actually, the day after, I took the GMAT. So I really knew I wanted to do that. I went to Booth, changed careers into venture capital to mix both of my two interests. And, the rest is history. I graduated in 2001,
Yep.
sorry, 2002, and I started my career in 2001 in venture, and that's what I've been doing since.
It's really interesting. You and I are very close, probably the same age. When I graduated college, I was in college. I did finance and entrepreneurship. So my question was, do I go the investing route or the operating route? And I was just lured in after I sold my first business in college. I was just lured into it was the dot-com boom, not the
Right.
burst yet. It was the boom. And there are so many companies that were looking for eager young people that wanted to learn, that could put on a bunch of different hats. And so I played a variety of roles in those companies and saw the boom and the bust of the dot com, and just stayed in it because the learning was so powerful. Like everything that I learned in school was great. I mean, entrepreneurship program back in the late 90s, there was not very many of them. There's a handful of schools that were doing that. And I knew exactly what I was going to start a business or be involved in that from the very beginning. And I learned a ton. But when I got into venture backed companies, the speed of learning was so fast. It was addicting. It was just like things were changing constantly. We are learning things constantly. I used to say back then, like everything I learned at school doesn't apply anymore. I don't think that's really the case. I think the case was I was just learning so much more, so much faster at the speed of holding a bunch of capital and being able to test a lot of things really quickly. So I think you and I are probably in that same era. You were probably drawn to that. I can see how you would have been probably drawn to that as well, as like tech was like the plastic of the 80s, I think, in the early 2000s, right? Like everybody was in plastic in the 80s. That was the new thing. And I think, I see tech now, and it's just grown since then. So
Startups are crucibles, and the amount that you can learn is pretty incredible. I had the benefit of working at a startup for a little bit before business school, just to get that
Nope.
flavor of what it's like to be an operator. I've
Right.
been a builder in the sense of building software, but not building companies. And it was a really interesting, eye opening experience. The amount I learned in that short period of time was awesome, really kind of set the stage. At the same time, to your point about that fork in the road, I also understood myself well enough to know that I wanted to build a little bit, but I was not cut out to take the same types of risks
Mhm.
that a founder would.
Right.
Do I want to support founder? Do I want to be the supporting cast in that movie? Absolutely. Do I want to take a derivative of that risk? Absolutely. That's who I am. But ultimately, that understanding of what was going to get me excited was important in making my choices along the road, because my alternative would have been to go back to the startup world and really accelerate that learning and do it in an apprenticeship. But ultimately, being true to myself, realized that maybe one quantum of risk lower was better for me,
Yep.
and being in that supporting role was the right mix.
Yeah, that makes a lot of sense. And that was a question I was going to ask you. Why investing? Why investing? Um, from risk tolerance and interest. What else gets you excited about the investing piece of it?
I just had a chance to start my class at Booth this past week, and that's how I open up the class. Is like, why is venture exciting? So I'll give you some of my reasons. One is you just constantly are learning, and you're learning about really neat things, the edge of technology. Two, you're helping create jobs, a tax base, an important part of the U.S. economy, and how we compete across the world. Three, and this might be the most fulfilling one, is you get to work with founders who are trying to accomplish their dream. They're trying to accomplish
Right.
some pretty solving some pretty important problems for many of them. And I had the opportunity to see a founder who we backed who had a really successful exit recently, who decided to, had kind of accomplished a lot of his dreams at a pretty young age, early 50s, and was saying to me, he was just really satisfied with how much that he has really accomplished this dream he's had since he was 14. And in some ways it was like, now what for him?
Mhm.
But it was a lot of satisfaction to me to see that for someone who is very smart, who solved the real problem for lots of people, in at the same time accomplish a dream of theirs, a lifelong dream. I'd say the other reasons is working with really really smart people who challenge me. There's also a huge amount of variety every day in the types of
Right.
things I have to do and the types of skills that are needed and how I'm challenged. There's certainly opportunity for wealth building. It's much more on the founder side. Venture capital is maybe a way to get wealthy over that takes a really long
Yeah.
time.
So, all
Uh,
right.
it is not a way to get rich fast, but certainly that's an aspect of it. And I get to marry the two things I'm very passionate about, which is the technology and the finance. So you put all those things together, and then ultimately realizing like I'm betting on myself. And I've been in a corporate job, I've worked at a startup, and ultimately what I found in those experiences is that there I do better when I'm betting on myself. When the translation of the outcome and the results is more based on what I'm doing and my input and my success rather than what's happening in the larger corpus of the business or in the
Right.
economy generally. Like that or what's happening in my peer group of people who started with me and other random factors, that was frustrating in the corporate world. Whereas here, it's just much more of a clean translation. A lot of luck, let me be clear about that, but
Right.
but ultimately, that was also something I realized about myself, like loving being an underdog and loving betting on myself.
Right. Yeah, I can definitely relate to that. I can definitely relate to that as well. My experience working with teams, over the years, it was just a collection of everything that I was learning and putting it together into the Peak operating system, Peak OS. I'm sure everybody formulates a methodology. Like I was formulating that methodology before I actually knew I was going to bring it to market. And then I made a very specific decision to bring that to market and to really put it together. But what's your methodology, or at a high level, like what's your methodology around investing, and like what are you looking for? What are those kind of elements for you?
Yeah, it's a great question, and it's one that every time I have a chance to meet investors who I admire, I ask a similar question. My first job when I meet a company is to really understand its strategy. ultimately how I evaluate the company is different based on the strategy, based on the stage, right?
Mm,
So a company that's trying to become, let's say, a low cost provider, for example, I really care about how they maintain that low cost advantage. I mean, there's a lot of other things that matter, but until I answer that question, everything else is somewhat irrelevant,
mm,
right? If it's a technology company that's going to win based on superior technology, I want to understand, can they defend that advantage? Does the market care? There's a lot of better technology out there that the market doesn't care, won't pay more for. And does it work? So I know those three questions once I identify the strategy. If I'm not sure about the strategy, I can waste a lot of time evaluating a deal, may not get to the right questions, right? And
mm.
ultimately, my job as an investor is to assess the risk and reward. And are those two things in balance? Or maybe they're out of balance in my favor as an investor.
All
But
right.
those are the types of situations that if I don't understand the strategy, I really can't make that assessment. And so things like the team matters in all cases, but whether I care about market size or intellectual property, let's say the emphasis will depend on the strategy. So I'd say that's my first job is to do that, all again in an effort to assess risk and reward. Ultimately, what we're looking for are companies that are really innovative, that have a chance to have a dramatic outcome for their
Right.
founders, for us, and for our investors. And so that's the other thing that we look for, which sometimes requires a little bit more imagination, may not be obvious in front of you, of what's the potential of a company, what's the potential of its market. You look at companies like Airbnb or Uber that both had markets of zero when they started, but they
Mm.
were acting on markets that were very large, a big part of the GDP, in fact, on the way that people spend money. And so, in all those cases, those investors had to have that insight to say, look, market today is zero, and for a lot of traditional investors, they might have stopped there. But for them, they went further and said, this is a proxy. The market for hotels is a proxy. The market for taxi cabs and other transportation is a proxy. So that's the other thing that we look for is this a deal that can return the fund? Is this a deal that has that kind of potential to really have remarkable impact on society and on business?
Right.
That's the other thing that we're looking for in those examples.
I ask that question all the time, and I think you came at it at a different angle that I think is really interesting. Because everybody wants to tell me first it's the people, which we all agree people are really important. But
Yeah, yeah, that's the easy answer, right?
right. But I do wonder about strategy because strategy can change, right? Like overall, you look like at an Airbnb, you knew what the game was, right? You know what the game is. And I always kind of think of like the strategies to how. How are we actually going to do this? And strategies can change. How's that work for you when you kind of like digging in and peeling the onion back, asking strategy questions? And again, at different, like you said, at different stages, they may have a stronger answer or not. Um, you tell me a little bit more about your thought process behind that?
Yeah, listen, when you're looking at a seed stage deal, you care about the people and the market size and the opportunity a lot more than you do a lot of other things because frankly, a lot of it's not developed yet. And you can get
Right.
yourself into a mode where you say no to a lot of deals because of course those questions aren't answered yet. And you're gonna have to make an investment decision under a lot of uncertainty. But those can be really interesting opportunities. So from that standpoint, the strategy you expect to be less developed, and we spend more, I'd say maybe less time on the strategy and more on the people and their ability to execute, and maybe perhaps more so their ability to adapt, right? If you think about Darwin and
Now you're speaking my language.
yeah, you think
That's
about
that's if there's one word that this book is, it's the process to adapt. Like so, yeah.
yeah,
Now
and, and that's the key. Like, I'd rather back somebody who is adaptive rather than someone
Mhm.
who seems to have the pristine strategy at that given time, because as you point out, the circumstances change, the environment changes, the companies change, their competitors aren't static. They're
Yeah.
going to also change and adapt, and so it's those that can adapt. I was just talking to one of my former interns from a long time ago, runs a fund, asked me about one of our portfolio companies that they're interested in, and the thing I said is like, this is a team that adapts. And if I look at our history with them so far, that's been the answer. And so, would I say they're the absolute most intelligent, smartest people and most experienced people I ever work with? No. Would I say that they're incredibly adaptive? Yes, and they are now showing the results. They've really hit a niche that is working for them, and then has a chance to turn from a niche to a big business. So
Right.
yeah, for sure that adaptiveness. But back to your asking about strategy. When you get to a Series A and certainly Series B, you expect that the strategy is there. And I think one mistake that investors make is they'll convince themselves there's a bigger opportunity because, hey, here's one strategy and then we're going to expand it into a different strategy or into a different industry, or we'll move up market. All those things are possible at the right time with enough capital. But for the most part, I'd rather underwrite a business that all it has to do is execute the strategy that's working today. And the
Right.
reality is, we take enough risk as it is. I'd rather take less risk on a new strategy that's untested working, and know at the outset that all they have to do is the same thing with the same kind of customers, and then that's a huge business.
Right.
Because talk was that way. Yes, talk could work in wineries, it could work at car dealerships, it could work at all these other things, because ultimately what it did was sell time slots, initially in restaurants and mostly in restaurants. But we underwrote the deal. We said all that is lovely, but in the end, we have to believe that it's going to work for restaurants and type of restaurants it's selling to today. And
Right.
ultimately, that's what it did. And we wound up selling it to Squarespace, and it was a great outcome for everybody because it was very focused. And back to the strategy question, adaptive. Yes, you have to adapt, and Talk had to adapt to the pandemic. Like, of all,
Mhm.
that's the adaptation of all adaptations. But in the end, focus wins. It always wins, especially in companies that have limited resources. The ability to go up market or to go across to another industry or a new ICP, all those other things. Yeah, again, yes, that can make sense, but it takes a lot of resources and can be distraction for the
Mhm.
team. And so
Yeah.
that's the other thing I like to repeat to myself, especially as we go through our investing process, is focus wins.
Focus does win, and I think, what the challenge is, and it's funny, trying not to bring it back to what I love to talk about and what I wrote about, but, like, teams need to be adaptable, but they also need to be focused, and to a lot of people, they don't know how to do that, right? And so, and another thing that you said is, like, what I'd like to say is execute, right? Like, it's you choose the strategy and execute on it. So that's part of the reason, like, I like to really define a 3-year vision, not just a big wild vision. We have the mission statement, but what 3 years out, what's success look like? What success look like in each one of those functional areas of the business? That's really where we want to be and what we want to do. Then it becomes the strategy is how do we actually accomplish that? And if we can do that as a team together in a room and write it down, then we're all going in the same direction. And not until we have that alignment, meaning we agree upon that, can we actually get focused. And there's a lot of teams that I work with, even good teams, where when I first come, they feel very focused. But as we go through these conversations, they start to realize they weren't in alignment, but they had a variety of different focuses, meaning that they were going in a lot of different directions. And that also means they're not very capital efficient, right? So for me, I love working it backwards from the mission to 3-year vision, which is specific, but still, you know, long term,
Right.
back to the 1-year plan, back to 90 days, and reverse engineer that so we can all get in aligned, we can all get focused. And what that does is makes a really capital efficient company and happy people that can know what they need to do so they can just run, versus having the CEO always checking in and being the gate for everything and running around and scoping in and scoping out. Um, I think it's not easy to go from thinking I need to be focused and adaptable, right? I think that's a really hard thing for early stage and growth stage because I think you'd probably agree too. Like even at the growth stage, there's going to be change that happens.
Yeah, yeah, for sure. I mean, I think, listen, a lot of the companies that we're backing are in environments that are changing rapidly. And, they don't have control of those environments. And again, back to origin of the species, like, you have to adapt.
Yep.
And now, does it mean that you're abandoning your mission? Not necessarily. In some cases you have to, but in many cases you don't. And those adjustments don't have to be significant, but you have to adapt, because before you know it, you look up and a lot of things have changed. And
Yep.
I think your approach makes a lot of sense to me, like looking down at the horizon, but also making sure you've got something that's implementable that you can
Yeah.
execute on, that's very tangible. If I think about an analogy, it's like raising children. Eventually your kids go off and they become adults, whether they go to college or directly into the workforce or whatever they wind up doing. And so when they're young, you can be very tactical with them and you can help them make decisions or make decisions for them. But at some point you need them to have that, in your parlance, a 3-year plan and a mission, so that those moments where they're making decisions in college when you're not there, where
Right.
they're making decisions late at night and you're not around, that they're making good decisions because you've set that set of values, that mission of what they're trying to accomplish, so that they have something to guide them. And the same thing is
Yeah.
true in a company, especially as it scales. At the beginning, the CEO can be involved in every single decision, but at some point, that's obviously impractical. And you have to set that vision, set those goals, so that when your rank and file employees, or even the folks that report directly to you, don't have access to you and need to make a decision about what to do, they know exactly what direction they need to push.
Yeah.
And I'm sure a lot of the people watching this are saying, "Oh, what Jeff's saying makes total sense. Of course, I would want to do that." But I can tell all the people watching that a framework like this is really important, because so many companies don't do that work. And so in those moments that an employee has a marginal hour or day or whatever else and doesn't have access to the CEO to get calibrated on what they should be doing, or their manager,
Right.
they wind up wasting time. And back to that focus, that's money and time that's lost, which is really precious in these kind of scaling businesses.
Yeah. You don't want idle people, especially in these organizations.
Right.
Um,
It's expensive. Like, you think about a meter running in a taxi, waiting
yeah.
for someone to show up, or an Uber or whatever. And it's really costly when you start taking that and multiplying to times all the people in an organization.
Yeah. And a lot of times people just don't have the information to run and they need to run. And that's what the CEO wants. A little callback to the earlier part of this conversation. When I went from selling my first business and being in entrepreneurship school, to getting into, the first .com that I was in, the thing that I recognized right away is I ended my first business after writing the business plan and handing that off to the person that bought the company. And I did that in school, right? And that's what they taught. And then I get into this wild VC backed, fast paced tech world. And I was like, man, business plan doesn't work. Like
Yeah,
you,
right.
you, you like, yeah, like
I don't have
that was
time for
that was
that.
the end of the business plan. And what I realized, and what I call now as an operating system, is this cadence that we do, which is like an ongoing, living, breathing business plan. So annually, we're defining that 3-year vision, 1-year plan, OKRs, KPIs, and every quarter we're checking in on that and updating new OKRs. And, so it's having a cadence of developing those tools, keeping people aligned, and then that weekly meeting of executing on those things. And so now what you see is like these micro pivots and macro pivots at those different time frames. And, back in the day, pivot was a bad word, right? Like pivot meant like you're going the wrong direction. Now we have to switch the whole company. But it the reality, and I love what you said, it's that adaptability that you like to see in founders. They need to be adaptable. And it's not only those big pivots, it's those micro pivots, and probably the ones that most people, like Cameo, I saw do some macro pivots, because of the market, but it's all those small ones that were happening too that a lot of people don't see. And I think that's going back to kind of origin and evolution. It's really science. It's a process of like discovery and figuring things out, what works and what doesn't work.
Yeah, that's right. I mean, listen, a lot of those small adjustments add up over time. They compound. And to your point, it's about leadership and setting those goals, setting the 3-year plan, setting the plan that's about execution in the shorter term, that
Right.
really help guide, so that, again, you can keep everybody focused, everybody aligned. They know what to do with their marginal time. And you realize that that investment in energy to put those things down winds up translating beyond just your team. It winds up helping align your board members, your investors, your advisors, your customers. Like, you start to think about all the concentric circles and all the constituents in your company, and it becomes really, really important. And look, I've seen both sides. I've seen companies that do that really well and how much they gain in efficiency from that. And I've seen ones that don't want to do it, or think of it as like an administrative distraction, that wind up causing a lot of self-induced injuries
Right.
that
Right.
could completely be avoided, right?
Yeah. There's a lot of low hanging fruit that it is easy for people to do this stuff. And some people do it really well, and some people kind of do it, and some people don't do it at all. One of the questions I have for you, and I kind of want to go back to the investing side, is like, I'd like to start with how do you define the role of an investor, and like maybe your role as an investor, and that towards like the CEO and their team? Like, how do you see your role?
It's a good question. What's interesting is that in every situation, every company, it's a bit different. And going back to the theme of adaptation, it just depends on what the team needs
Mm.
and what that manager needs, right? I have been in situations where the best, absolute best thing I could do was get out of the way and show up at occasional moments where my skills were really relevant. And then that's it. And just let the team execute. And I would say earlier in my career, I might have been frustrated by that because I wanted to get involved and roll up my sleeves. Again, I'm a builder too.
Yeah.
But as I've gotten older, I realized like, hey, listen, in the end, that's the best thing I could do to create as much value as possible for all of us as shareholders. So it runs from like situations like that to other situations where it's very frequent conversation, like over text, over WhatsApp, all of the time, where I'm a resource. And my goal in all the situations is that I'm the first call when there's a crisis or when there's an opportunity, and the founder needs to think through it.
Yeah.
And part of what I can bring is, yes, I am an engineer by training and I understand the product side of the business, but perhaps more importantly is I've been doing this for almost a quarter century. And so I like to say I've seen a lot of movies. And now every movie is different, but sometimes the plot arcs are similar. And what can we learn from the experiences I've been exposed to, which might be the course of over 100 companies? And how can we take those lessons that are congruent and apply them to what you're doing? And that's the way I can help. And it doesn't matter what it is. It can be something as obvious as we need to raise capital. Can you help me make introductions and help us get our pitch tuned up? Sure, that's an obvious place that we can help.
Yeah.
But it's also run the gamut of helping founders sort through things like, hey, we have an immigration issue with one of our employees, for example, something we help with. Obviously, recruiting. Sometimes it's just about empathy and it about helping a founder through a tough time and just listening,
Hmm.
right? Again, us being builders at Origin, we have a certain appreciation for what a founder is going through. There's one founder where at the beginning of the investment, we did a kickoff and he said, listen, one thing I need you to do, Jason, is make sure I exercise. And I said, great, that's easy for me to do because he knew that it's a stressful job. He's a three-time entrepreneur.
Right.
And and for him, that was a way I could add value. So it really doesn't matter. And we're as available as the founders need. And because we want to be a resource, I used the phrase supporting cast before. That's how we look at it. I'll tell you what we're not. We're not there to run the companies. We're not there to pound our fist at a board meeting to say you must do this. We're not as close to the companies as the founders are. They are experts in their business. So
Hmm.
as I said, we can take some of the lessons learned, we can apply our network to help the companies, but not there to run them or to boss people around. That's that's not what we're built for, and that's not the way to forge a real partnership with the founders.
Yeah, I like that. I find a lot of founders, and even second time founders, even in the growth stage, right? Not even the early stage, struggle sometimes with what to share and what not to share. Like, how transparent as a CEO should I be with my investors and my board? Um, you know, I think most of us would say like share everything or be completely transparent, but there is a point at which there's information that doesn't matter to the investors, right? So I think, I see this a lot, especially in executive teams that I work with. Like, we work on things, what are we gonna share with the investors? What are we gonna share with the team? What are we gonna share externally to the clients and customers? Um,
Right.
what's your thought, and do you have a talk with founders when you first start working with them with that transparency, or how do you help them know where the line should be?
Yeah, very good question. So first of all, yes, we have a talk with the founders at the start, and we say, look, here's our style. We want to know what's happening, especially when it's something material, and we want to know quickly. My training as an engineer, when there is a bad situation, I'm not there to judge. I'm not there to get emotional. I'm there to understand what are the constraints, what are the opportunities, what's the situation, what's our best method of of action, and let's decide that together. The
Mhm.
sooner that we know about it, the more context and information that we have, the better solutions we're going to come up with as a team.
Yeah.
So that's our attitude. When you have an opportunity, the same thing applies. Now, to your point, we don't need to see every single detail of the company. That's not efficient for everybody, especially the team producing that information. But ultimately, that transparency is pretty important. In fact, we've said no to deals. We've passed on deals because we felt that we would not get information and would be a real partner with the team. And
Mhm.
ultimately, again, our ability to help and to really exercise and utilize all the resources we have as a firm, not just me, but the rest of our 8-person team, depends on us knowing what's going on in the company. And I find what's interesting is that younger founders that probably could use more help and more input tend to be more closed about what they
Yep.
share
Yeah.
versus more experienced founders who want to lay everything out on the line because they understand their limitations and they understand that they've assembled around them a team of people who can assist them. Again, not with judgment, but more of like, how do I help? I had a founder said the other day, Jason, I felt bad about asking you for this assistance. I said to the founder, don't be crazy. Like, this is what we're here for. And any moment where you can be explicit about, hey, can you help me with this? We're so eager to help because, again, we've been in your shoes and we know that it's a lonely job.
Yep.
And sometimes that expertise, even if it's something as mundane of wordsmithing a paragraph, right? That helps accelerate. That's a shortcut for you as a founder. Great. Give it to us. We'll take it.
Yep. Yeah, I like that. I find it within the teams too. It's typically the same people that are not being as transparent with the investors are also not as transparent with their team, and there's a ripple effect on that. It's
Yeah.
okay to say I don't know or we haven't figured it out yet, especially to your team because teams will rally to figure that out or to find the understanding of that. But if you're like that with your team, it ripples down into the team where they're being closed up. They're trying to look confident and not admit when maybe they don't know or when they make mistakes. And the only way to like move forward is to be transparent with that. You know, like SpaceX, they sent 3 uh, of their rockets to the ground. Like you have to be transparent when you're shooting rockets to the
Right,
sky,
right,
right?
right.
Like there's like it wasn't 3 and
They
out. The
make, they
fourth
make enough noise, people probably would find out. But yes, that's for sure.
right? The fourth
For
one
sure
made it.
true.
Like, it wasn't 3 and out. The fourth one made it. Like every team I work with, there's going to be success and failure, right? And I think it's important. People won't help if you're not transparent. And I find the great CEOs and founders and teams that are like transparent about what they know and what they don't know, it rallies the team more than anything. And the rest of the teams like
Yeah.
that. And a lot of times, I've seen people get fired for not being successful, and it wasn't that they weren't being successful because they weren't doing their job or didn't have the experience or background. It was for the fact that what they were trying to do didn't work. And sometimes that's okay. Right? Like, but if you can share that this isn't working, maybe the team or, someone else can help you. The investor can help you find a way that they've seen before that you can try. And maybe that fourth rocket makes it into space.
Yeah, no, you're absolutely right. I'll tell you a quick story. One of our portfolio companies has a CEO who's really, really transparent, and for many years, like he shared with the team a lot of details that other CEOs wouldn't, yeah, including some difficulties raising capital. And he had built an incredible trust and a culture of trust in this company. And there was one day, right before Series B was supposed to fund, it was already signed that the Series B lead investor pulled out. And the next, that was a Friday. Sorry, that was a Thursday night. We got the information. On Monday morning, he met with the team and explained exactly what happened. And do you know how many people left the company? Zero. You know how many people got upset or were, whispering in the hallways about, is this thing going to fall apart? Zero. What the team did is they rallied and they supported the company. We raised a small bridge round and then eventually a Series B about a year later with the same firm, believe it or not, that pulled out. And it was an incredible story of how that transparency had built a lot of trust and gave that CEO this incredible power to rally the team in a time of some opposition,
Yeah.
a time of crisis, and eventually prevail.
That's a great story. That's a great story. You don't hear a lot of people going that route, so that's so cool to hear. Um, all right, I have a couple more questions. I have two last questions.
Okay.
Trying to put them together for myself here. The first one is, what was the what has been the biggest lesson learned in investing, and thinking in more terms of maybe something earlier in your career you kind of had a strong opinion or belief on that's changed.
Let's see. I think I'll tell you one thing that hasn't changed. And like in the end, the relationships are really important. It's a people business.
Right.
I felt that from the start. That's always been true. And whether that is the relationship with founders, the relationship with your partners, the relationships with co-investors, this is a long-term game.
Mm,
And really doing right by people, even in situations where that means you make less money or you're less successful or what have you, comes back to you in spades. I'd say one lesson I've learned is I alluded to it before. Earlier in my career, if I found an opportunity I didn't think was big enough, I would think about what are the different vectors for this business to expand. And one of the things that I've come to believe with great gusto, I'll say, is focus wins. I'd much rather underwrite a deal that doesn't have to change its business or expand into a new industry. I'd rather back one that has a big enough idea that it can focus on exactly what it's doing today, that it has some proof that works. And so to me, that's been something that has changed over time. And I think what that's led me to do is back bigger ideas, focus on people who are more adaptive and can adjust rather than having to switch entirely industries, but can make the one that they're working on work. Those are the things that's, I'd say, one big lesson over time. In addition to the reinforcement that in the end it is about people and relationships,
mm.
and that's what's made companies and investments successful or not.
One more question is, looking forward, like, what are you really interested in right now? Like,
Obviously, a lot of people are excited about AI, and there are some really interesting software companies that are using AI. All that's awesome. What I and we continue to make investments in that category, and we'll continue to do so. What I'm also interested in is services businesses. 70% of our GDP, okay, trillions of dollars, is spent on services. It is the largest category of spend for where
mm,
how we spend our household dollars. Okay. However, it's gotten a tiny, tiny bit of venture investment. Why? Because services businesses have low gross margin percent, 40, 50, maybe 60% if you're really tuned up. And to scale them, you need to hire lots of people, and that's messy and slow. So that's why there have not been very good venture investments over the years. But now with AI and AI agents in particular that can automate services businesses, all of a sudden now you can improve the economics. So that gross margin percent can look more like 60, 70, maybe 80%.
right.
And not that I want to change the way services are delivered. I don't in those cases. What I want to do is these services businesses that have huge amounts of data and know their industries really, really well, paired with someone who understands AI and how to automate. Maybe one tool today and then another tool 2 years from now that might be commodity business, but starts from scratch with an attitude of we're going to automate. And so now it's not replacing the people, right? But now to scale, instead of hiring 10 people, I need to hire 2 people, and they're all supercharged by the automation that's behind them.
Yep.
That to me is exciting because I think there'll be many, many billion-dollar companies built that way because of how big that portion of our GDP is.
Yep.
Software GDP in the United States is only 10% of the GDP. When you think about how many venture dollars go into software, and there's really great reasons why that's happened and why it should continue to happen. But what I'm excited about is what feels like a greenfield opportunity for a huge, huge number of dollars on spend that now become in scope for a venture investor where previously they couldn't achieve venture returns.
Well, I think we're gonna look back at this episode in 10 years, and we're gonna say Jason was right about that one. I really
Absolutely.
do.
He's wrong about everything else, but that one thing, No, we'll see. We'll see. It's tough to make predictions, but
Yeah.
it does. There's certainly hype in the AI world, and we've gone very quickly from replacing labor entirely to calling things co-pilots and agents. So I've been through enough of these technology cycles to understand. Incidentally, AI has been around for decades. When I was a kid back in that 1987 timeframe, we were talking about Alan Turing and the Turing test for AI. So it is not anything new, but because of advances in computing, we're at a point where its power and the growth has been sensational, and there's no question like it is making its way into everything, and
Yeah.
and I think that makes sense. Just like the mobile revolution in the early 2000s, where everything became a mobile app, right? So
Yep.
I'm excited for this next phase and all the opportunity that presents, and trying to find those companies. And I'm happy to hear from the people watching this, who are building a services business from the ground up to be driven by AI, have access to data, have subject matter expert and an expert in AI. I think that's the combination that's going to be a winner.
Yeah, that's great. All right, so here's the final questions. It's more of a scenario, and it's probably one of the most important questions you ever been asked in your life. So I'm glad you're sitting down. Uh, the scenario is this: you're trapped on a desert island. You're going to be there the rest of your life. Now you have food and water, shelter, even healthcare. You got everything you need, but the one thing you don't have is entertainment. There's no
Hmm.
entertainment on the island, and so fortunately for you, an old 80s boombox drifts ashore with unlimited batteries, but
Okay.
you can only bring one album to listen to the rest of your life. And it can be
Yeah.
of any decade, any genre, but you only get to choose one album for the rest of your life. What are you going to bring?
I'll probably bring Led Zeppelin 4.
Wow.
That would be my first choice. My second choice would be Bob Marley. Has a greatest hits album that's pretty awesome.
Yep.
Only because I feel like that would be consistent with the island situation and probably a little bit more calming than Led Zeppelin 4. But Led Zeppelin 4 would be my first draft.
That's a great answer. I think we've had a couple Led Zeppelin answers so far, but both of those would be good. I think both of those would be good.
What's your choice, Jeff? What's your
Oh,
choice?
what's my choice?
Yeah.
I'm really I feel like every time I do this, I kind of almost want to buy into what the other person wants to do. So I really get into a lot of albums for like a period of time and then I move on,
Okay.
so I go through phases and I've never stopped going through phases of
Well,
music.
you're the host of this thing, so we're not going to force you to answer since you just
You
sidestepped an
were
answer
you were
so
the
well.
first one to ever ask me it back. So I feel like I should give you an answer. And I want to go with Bob Marley as well, because I think you got to stop.
I'll expect an email in a couple of hours. So it'll be
Sounds good. Sounds good. All right. Well, thanks for joining me on the show. I appreciate it.
Jeff, what a pleasure. Thanks for having me. Appreciate it.